What is going on, my friends? Ryan Williams here, back with another one, and I'm going to be sharing with you guys some very important updates to my portfolio that is just so urgent it could not wait. Now, if you're familiar with my content, then you'll know that every week I update you guys on how my portfolio is doing and what I'm buying each week. But today I have some very special news, and we'll be talking about two high-yield dividend stocks that I will be adding to my portfolio like as soon as possible. Anyway, before we get rocking and rolling, if you guys love dividend stocks, then let me know by giving this video a big thumbs up. And also, I just want to take a quick moment and thank all of you guys for all of the support you show to me and my channel. Thanks to you guys, we recently just surpassed 4,000 subscribers, which is huge considering I only started this channel just about 1 year ago exactly. October 15th of last year was when I posted my first ever video on investing, and I did not at all expect to be where I'm at now in such a short amount of time. And not to get too sentimental, but sincerely, I would not be here if not for you guys. So once again, thank you so much. And while we're on the subject, honestly, my current goal with this channel is to now get it to 5,000 subscribers by the end of the year, which means we have 2.5 months to get there. And if you guys can help me make that happen, I'm gonna be doing a huge giveaway. I don't exactly know what it's gonna be yet, but I have some really good ideas written down. So we'll see what happens. But at any rate, go ahead and hit that subscribe button and let's get this baby to 5K, okay? I know we can do it. Anyway, sorry for the tangent, guys. You are awesome. Keep killing it. And now, without further ado, let's get into it. All right, now before we get into the main topic today, talking about those two high yield dividend stocks, I want to first go through and give a quick portfolio update and just share with you guys how my portfolio has been performing in the last week. It's actually been doing pretty good. As you can see right over here, we just surpassed the $28,000 mark, which is the first time this has ever happened. So this portfolio is now officially sitting at an all-time high with a current market value of $28,044.16. The total gain as well is starting to creep back up for this portfolio. Looks like the current gain is sitting at 5.63%, and in dollars that is almost $1,500, which is slowly but surely getting back up to where it once was. I think the most that I've ever been up in this portfolio is about $2,300. And if we compare the market value and total gain to where this portfolio was last week, I think we'll see quite a bit of a difference. So as you guys can see from this screenshot right here, in last week's portfolio update, the market value was sitting at $27,571.20. So since then, we've gained just almost $500 in market value. And then the total gain in this portfolio when we last talked about it was 4.46%. In dollars, that's $1,178.40. But as we see, guys, just from where it's at today, we've gained about $300 in total gain. And then what is that? A gain of about 1.2%. So like I said, it's slowly but surely creeping back up there. We've talked about this in recent videos, but September was a really weird month for stocks, guys. A lot of mine just really started to take a nosedive, which also, as we've discussed, is bittersweet. But I will say I'm not too upset to see the stocks in my portfolio performing well. That makes me feel good. But also, guys, there are still some stocks in my portfolio that are sitting at quite a bit of a discount, and ones that I'm actually still down quite a bit on, which we'll take a look at right now. So just in my portfolio, guys, it looks like AbbVie is down almost 4%. It looks like Campbell's Soup is down almost 10%. And then AT&T is down almost 12%. This one has really not been doing well for me. And then Verizon is down 7.43%, almost 7.5%. So my telecom holdings in general are just really not doing too well. I'm pretty used to seeing Campbell's Soup in the red. It's been like that for some time. And then AbbVie, as of late, has also been in the red, which is fine. Anyway, as you guys know, if you've been watching my videos, I've been spending the last few weeks or the last couple weeks just stocking up on Lockheed Martin, and now have officially surpassed one full share of this company, which is cool. I'm definitely going to continue adding to this position as time goes on. It's still looking like a pretty good discount. Another one in my portfolio that is still looking pretty discounted is Intel. My current position with Intel is actually just barely up. 1.5% gain so far with Intel, and I haven't had this stock for too long. It's been bouncing back between, being positive and also being in the red within the last week, within the last couple of weeks. But even if I am up a little bit in both of these companies, in Lockheed Martin and Intel, I still think both of them are at pretty sweet discounts right now. And I'm going to be talking a little bit more about these two companies in just a moment, but before I bring them back into the conversation, let's go over to the diversification tab and just see how everything's allocated right now. So as my portfolio currently stands, guys, I'm really happy with how it's starting to shape out. I feel like I have a really great batch of stocks in here. I'm now at 20 different individual companies in this portfolio. I know in my last video I talked about adding Pepsi or Microsoft to this portfolio, which still could happen if both of them or either of them come down in share price a little bit. But unless that happens, guys, I don't see myself adding either of those companies to this portfolio at this time. And in the comment section with some of you guys, I was starting to share the idea of buying into Microsoft at its current prices. I was kind of chewing on the idea of doing that, but after giving it some more thought, I think I'll be best served by contributing some more dollars to the stocks that are already in my portfolio and work on building out these positions a little bit more. And even so, like I mentioned earlier, there are some stocks still in this portfolio that I can actually decrease my average cost per share in, like AbbVie or like Verizon. I would say AT&T because it's down quite a bit, almost 12% as we saw. But the point is there is better value to be found out there, and I think that is what I would rather focus on. So with that said, guys, my main focus right now is to continue building out my Lockheed Martin position. Looks like I have just under 3% to go to hit my target allocation in this sector. And then I'm working on Intel as well. I think every week I'm going to continue purchasing just a little bit of Intel to continue building out this position. And I would even like to, while it's so down, I'd even like to add a little bit more Verizon. So I might sprinkle in some contribution to Verizon as well. When it's all said and done, guys, let's go over here real quick. Lockheed Martin, which is currently 1.4% of my portfolio, will end up being somewhere between 4 and 4.5%. That's kind of my target allocation with this stock. And then with Intel, guys, which is right up here, it's almost 3% of my total portfolio allocation. When it's all said and done, this stock will be somewhere between 4 and 5% of my portfolio. And moving on, guys, I don't know if this next subject is something I've ever talked about before, but I want to talk a little bit about the core positions in this portfolio. So number one, my biggest position in this portfolio is Realty Income, which is right down here, making up about 9% of my total portfolio. And then my second largest position is AT&T, which is right here, which currently makes up 7.5% of my total portfolio. And then number three is 3M, which where is 3M over here? Okay, right down here, 3M is currently 6.7% of my total portfolio. And then the fourth largest position in my portfolio, guys, is Altria Group right over here, which makes up 6.4% of my total portfolio. And then the fifth largest position that we have, guys, is Johnson & Johnson, ticker symbol JNJ, which is currently 6.2% of my total portfolio. But one thing I will be working on, guys, maybe as soon as I finish building out Lockheed Martin and Intel, I would love to make Procter & Gamble one of the core positions in my portfolio, and it looks like I'll probably need another 0.5% to get it there. And then I would also love for Starbucks to be one of my core positions, which currently is 6.1% of my total portfolio. So it needs just a little bit more to get there. If I could have Starbucks maybe be about 6.5% of my portfolio, and then Procter & Gamble maybe be about the same starting out, I think that those would be two really good ones to add to the core positions. But then again, by doing so, that would kick Johnson & Johnson out of the top. And I like having that as a core position just because it's really reliable. It's a really secure company. One of the other things I'm going to be doing moving forward is I'm going to start contributing a little bit more money to this portfolio every single week. So as I mentioned, I currently invest $125 every single week into this portfolio, but I'm going to start bumping that up to $150. And instead of putting that into one stock, which is usually what I do every week, I'm going to spread that out a little bit more to 2 to 3 different stocks just to reach the goals that I've been talking on so far, building out Lockheed Martin, building out Intel, and maybe sprinkling a little bit of that into Verizon as well. I think by bumping up my contributions a little bit, I'll be able to achieve all of this and build out all of these positions simultaneously instead of one by one by one. That seems to be a little bit more effective the more I think about it. Now, speaking of increasing my contributions to this portfolio, I think that's a really good segue to the main point of this video, which is to talk about the 2 high yield dividend stocks I'm adding to my portfolio. Now, I'm just going to come right out and share what these stocks are. So the 2 I'm adding to my portfolio are JEPI, which is the JP Morgan Equity Premium Income ETF, which, as you can see on the right-hand side of the screenshot, has a dividend yield of 7.52%. And then the second one I'm adding is XYLD, which is the Global X S&P 500 covered call ETF, which has a forward yield of 9.02%. So both of these are really high dividend paying ETFs. And you guys might be surprised to hear that I'm going to be adding these 2 to my portfolio. Especially if you've been watching my videos for some time, you'll know that historically I pretty much only invest in individual companies, but I'm approaching the investment into these 2 ETFs a little bit differently, and I'll explain. So to break that down for you guys, I currently have a good chunk of cash just sitting in my checking account, and over the last couple of months, I've been chewing on the idea of doing this, and I'm just now finally getting ready to pull the trigger on it. But kind of my thought process behind it is that the cash in my checking account is just sitting there collecting dust. And with all the inflation concerns and stuff like that going on, it is losing value just sitting in that checking account. So I'm kind of thinking that even temporarily, it's going to be best to take some of that from my checking account, put it into my brokerage account, and put it into these two ETFs, where even if it doesn't appreciate in value, it's going to generate some passive income every single month. And you guys saw the yield on both of those ETFs, somewhere in the 7%, somewhere in the 9%. It's pretty high. So by investing into those, it'll really help me generate just some extra cash every single month, which I can then reinvest to buy more shares of the ETF, or use the income coming in to reinvest into some individual stocks. At any rate, it'll just be good to be generating more passive income instead of having that cash collect us. Hopefully that makes sense so far. And for me, guys, the difference between investing into these two ETFs and investing into the individual stocks in my portfolio is that when I invest into the individual stocks that I own, when I buy more shares of Starbucks or Procter & Gamble or Altria Group or Coca-Cola or you name it, guys, I have the intent of buying and holding those forever to collect and reinvest and grow that dividend income in those companies year over year over year. I really don't have any intent to sell any of these individual stocks at this time, okay? But when it comes to the two ETFs, guys, I really don't share that same sentiment. I really see this as more of a temporary, short, medium-term investment where maybe I hold it for a year, couple years, few years, or until I need to use that cash for something else. Maybe I wanna use it as a down payment on a home or something like that. I can then sell out of the ETF, get my cash back, and then put it towards whatever I need to spend it on, you know what I mean? And so in the grand scheme of things, I just figure it's better to collect a little bit more dividend income, a little bit more cash than not, right? So that's kind of my thought process behind this move. I think this is one that a lot of you guys out there deploy as well. And I would actually be curious to hear your thoughts on this strategy in the comments below. I know there's some of you guys out there who use your brokerage or use these ETFs almost as like a savings account. So I'd be curious to hear how that's worked for you so far if you're someone who uses that strategy. And just to share with you guys exactly how much I'm going to be contributing to these two ETFs. So in total, I'm going to be moving $4,000 in cash from my checking account into my brokerage account to put into these two ETFs. I'm going to divvy that up equally, so each ETF gets $2,000 invested into it. And as the months go on, guys, instead of just continuing to build cash in my checking account, I may continue to contribute money to those two ETFs and just use that to generate more and more income every month instead of just having it sit in my checking account. And I will still leave a certain amount in there as kind of like a safety net and kind of like an emergency fund kind of thing. So I'm not gonna kind of stress myself out financially by moving this cash over. I want to do it in a way that allows me just a better balance between keeping some cash on the side and also putting my cash to work. So I think $4,000 invested initially is a great place to start. And I want to share with you guys just how much I'm going to be able to generate from doing this. So we're over here now on the Market Beat Dividend Calculator, which is a tool that I love to use. It's so much fun crunching numbers in this little tool, but this is going to show us how much I might have at the end of a certain amount of time just from investing in these two ETFs. So if my starting investment is $4,000 in these two ETFs, which I did the math earlier, guys, the average yield between these two is 8.27%. And then let's say, guys, I'm not contributing a single dollar more to these two ETFs. It's just that initial $4,000, and then I'm going to let it do its thing. And then let's just say that there's really no dividend growth, dividend tax rate, we'll leave that there. And then let's say maybe the share price appreciates. Yeah, 3%, we'll say 3%. And then we have a monthly distribution. Let's see what happens after 5 years, okay? Just a short amount of time to keep it in here, but let's see what happens. So we're gonna calculate that now. And then let's scroll down and see where we're at after 5 years. So, okay, so not too much more, guys. It looks like after an initial $4,000 investment, after 5 years, that will become about $6,500. So it's not too crazy. And then it looks like at the end of that 5th year, we'll have generated $508.66 in dividends. So that is growing pretty well. And it's even cool to see that just in that 1st year, the annual dividend income is $343, an extra $343 from investing in these two ETFs. So let's go up here. Let's do a little bit of a different scenario. Let's say I do decide to contribute a little bit more money here. Let's say I decide to put in, you know, when it's all said and done, maybe it's like an extra $1,200 a year. So $100 a month, okay? Let's see what that looks like. Okay, so scrolling down from that, okay, so the situation is a little bit different. So instead of having like $6,500 or so, however much that was, we now have almost $14,000 after 5 years. And then instead of having like a $500-something income, we've almost doubled that, and in that 5th year have an extra almost $1,000 coming in just in that 5th year. So that's not too shabby. That's a lot more money coming in than I would have had if I wouldn't be making this move and would just have this money continuing to sit in my checking account, not doing anything, just collecting dust. So, and with that said, that pretty much wraps it up for this video, guys. So hopefully that makes sense, the move that I'm making with these two covered call ETFs. So we'll see what happens with that, that, guys. But realistically, I'm going to be making this move, making this transfer probably sometime at the beginning of November, I would say, in the next couple of weeks. I just want to see where things are at for me when I pay my bills at the turn of the month. And then after that, I'm going to transfer this money over and get it invested into these two ETFs to start generating some of that passive income from that. And before you guys click on to the next video, leave me a comment below, please, and let me know, number one, what do you think of this strategy? Do you think this is a good move? Does it make sense to do? And number two, let me know what you guys think of these two ETFs, JEPI and XYLD. Also, before you click on to the next one, guys, please do me a favor and give this video a big thumbs up. Don't forget to hit that like button. And if you enjoyed watching this video and would like to see more dividend stock content from me, go ahead and hit that subscribe button as well so you can stay up to date on all future videos. Whew. And with that said, guys, I will now get out of your hair. But thank you once again so much for watching. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.